Tesla shares on fire today after CEO Elon Musk and the company agree to settle with the SEC. Phil LeBeau joins us now from Chicago. Did Mr. Musk, Phil, accept the deal worse than the one he could have had last week, or roughly the same?
Maybe a smidge worse than one he could have been signing off on Thursday of last week. But look, at the end of the day, he still remains CEO of this company, and that's the reason the stock moved higher. Here are the terms of the agreement between the SEC and Elon Musk. He gives up chairmanship, at least for the next 3 years. 2 new independent directors will be appointed to the Tesla board. Both Elon Musk and Tesla will each pay a $20 million fine. That's nothing for Elon Musk. And then there is the oversight of Musk Communications. This is interesting in light of the news that we're expecting in the next couple of days, which has to do with Model 3 production and deliveries for the third quarter. They're expected to report that Tesla is sometime this week, and the expectation is that the Q3 deliveries will be at least what their guidance was, which was at least 50 to 55,000 of those Model 3s. Over the weekend, Elon Musk sent out an employee email. He didn't tweet this out. He didn't let everybody know. He sent out an employee email saying, if we go all out tomorrow, we will achieve an epic victory beyond all expectations. And guys, they sent out an 8K today. Tesla did with that email. In all the time I've been covering Tesla, I can't remember the last time that they put out an 8K regarding an email or a tweet or some kind of communications from Elon Musk. So it looks like the message is getting through. You're going to have to follow the letter of the law a little closer and just can't tweet whatever you want to tweet.
In the eyes of the SEC, Phil, what was his greatest sin?
Saying that he had funding secured, at $420 a share. And look, if you believe their complaint, while he's not going to admit any guilt here, if you believe their complaint, he had nothing lined up. Yeah, he thought he had some notions that he could get perhaps the Saudi investment fund to come in at $420. There was no term sheet. There was nothing signed. That's ultimately the sin there.
I see. All right, big interview coming up tomorrow, Phil, with Tesla investor Ron Barron. That is at 7 a.m. Eastern on Squawk Box, one of the most successful investors out there. We want to ask you, too, Phil, about the trade deal, the USMCA, USMCA. What does it mean for the car makers?
Well, there's a bit of a relief rally right now, especially for the big three who have large footprints both in Canada and in Mexico. Let's look at the numbers in terms of what will change for them, and really not a whole lot. If you look at where they were last year, automakers altogether, not just the big three, imported about 3.98 million vehicles from Mexico and Canada. They now have a cap at 5.2 million, so they've got some room to grow how much they build overseas and then, or in those two countries, and then bring here. The regional content will have to go up to 75%, but the expectation in the industry is that, look, they can do that. There are a lot of parts that are imported via China into Mexico in particular. That part is going to be closed off a little bit. And remember, Mexico and Canada, the two largest countries that we receive vehicles from in this country, almost 23-24% of the vehicles. Take a look at shares of General Motors. It is the #1 importer, or really production automaker, if you will, in Canada and Mexico, building about 1.19 million vehicles in those two countries last year, the majority of those being sold in the United States. Right behind GM, Fiat Chrysler. And guys, you know what stands out about both GM and Fiat Chrysler? They did not slow down production in Mexico when all of the saber rattling was coming out of the White House. Boy, we're going to tax these vehicles at 25%. Nope, they didn't slow down production at all, and this is a good deal for those guys.